This is Series 2, Episode 5. Today is the 23rd of January 2022 and this is my weekend stock market update. Everything I talk about in this video is for informational purposes only. If you decide to take action upon that information, that is your decision. You are responsible for all of your trading decisions. So I've been talking about it for weeks now. A market correction looked likely to me. And on the 9th of January, I actually said I'd moved almost 50% of my money into cash because I could see the signs. Now, even if it's for training purposes, I really recommend that you have a look at that video, and I'll put it up in the top right hand corner now. So the markets are in a very strong corrective stage now, as I expected this would happen, and it's absolutely brutal for some stocks. So it is what it is, guys. This is the market, and this is why I was trying to warn people on the 9th of January this might happen, because the price action was telling me it was going to happen. And this is why I keep banging on about price action and why price is king. I did talk about two possible breakout stocks in the energy sector, even those, and that's a very, very strong sector. Even those, they tried to break out and failed, so there's just nowhere to hide at the moment. So the best thing to do is to try and just sit on your hands. If you're in long-term positions as well, like I have got some long-term positions, including Alibaba, Palantir and Neo, those are all getting hit, but that's just part of the trading game that we're in, and those, I've always said they were long-term positions, and so that I've got all of those positions as well. So if you're feeling any pain on those, so am I. But I'll be looking to possibly add to some of those, but not yet. I can't see any reason to add to any position yet. So at the moment I'm almost 50% cash, as I keep saying, because I suspect further selling pressure is to come. So let me start with the Nasdaq Composite. This is a weekly chart. As you can see, I was talking about this 15,000 level. I said it was a psychological level and lots of people would be watching it. Let's go down to the daily chart now. This is where I talked about the corrective stage on the 9th of January, and you can see the market rallied us for a short period. I talked about this scolded cat bounce, and it's just collapsed. Absolute annihilation on the Nasdaq Composite. And it's because of this psychological 15,000 level, guys. I said if you look at that video, you'll see that I talked about it. I said lots of people will be watching it, and if we start getting below it, then there'll be lots of selling. Well, that's exactly what's happened. I really did try my best to warn people about this. Let me show you the Dow Jones weekly chart. I talked about this price action here, and I said I didn't like the look of it because it looked like the market is about to reverse, and yes, the market is reversing. Let's go down to the daily quickly, daily chart. As you can see, absolute brutal sell-off here. I just want to draw in a moving average 1 second just to see what's happening there. I'm going to draw a 200 period moving average. Yeah, you see how price held at the 200 period moving average previously back here, but we're just getting below that moving average now. That is more negativity. That 200 moving average is a very strong signal for a lot of traders. If you get below this moving average here, that signals more selling is likely to come. So it's just all negative, guys, but like I keep saying, I did try and warn people as best as I could, because there were a lot of people peddling nonsense on YouTube saying buy this, buy this, buy this. And even myself, I said to two potential stocks last week, energy stocks, because they were showing really strong signals. But I did warn you that I didn't really want to take trades at the moment. And yeah, those also got hit. So everything's getting hit, guys. It's really quite nasty at the moment. But this is what happens in the market. Let me show you the S&P 500 now. So this is the S&P 500 weekly chart. I talked about this trend line at length, and I really spelled it out last week, saying basically I can't make this more obvious than this. I said if we break this trend line, it's going to probably spell really significant selling, because it's just such a strong trend line here. And look at this. This is lethal, and this is on a weekly chart. Let me just show you the daily chart. So in that episode that I did on the 9th of January, this is where I was talking about it, about the 9th of January. And price went up a little bit more, and then the following week I talked about this head and shoulders pattern. I said this is a head and shoulders top. Shoulder, head, shoulder, very weak price action. Came down, and I said if we broke this trend line, that would be a very bad sign. because it's basically called a neckline of this head and shoulders pattern, but it's also a very, very strong trend line, as I keep telling you, or keep trying to reiterate. And look at it, absolutely annihilated, because lots of traders were watching that trend line. This automatic selling comes in because people start panicking. So there's all the information, guys. It's a horrible time to be in the markets at the moment, but that is what we're in. If you're trading, you're trading, especially with the longer term positions. But let me start discussing the positivity now. We are in a correction, so it's very dangerous to take any new positions now. The energy stocks, nothing seems to be working, so just be really, really careful. And this is just for informational purposes only, but please just be careful. The markets will eventually start to show signs of life. So yes, there's a nasty sell-off, but my goodness, there will be some amazing opportunities out of this. So, of course, I'm watching the markets every single day. I've been doing this for 15 years, and I get it wrong just like other people do, but I try my best to get it more right than wrong, and I normally do a reasonable job at doing that, I think. So we just have to grin and bear it, see what happens. Eventually, like I said, there will be opportunities, and I will be getting on top of those opportunities as soon as I see them. Some final thoughts. We are now in earnings season, so there will be lots of volatility with different stocks. For example, Netflix. Let's have a quick look at Netflix now. Look at this for a brutal sell-off. This is a weekly chart. Absolutely horrible if you're in Netflix. Even as a long-term position trade, that would be horrible. So yeah, it's there just isn't a very nice place to be at the moment. There is no safe place to be as far as I can see at the moment. So with earnings, this was caused by earnings. There will be lots of movement in lots of stocks, and you should also be aware that on the 26th of January, which is next Wednesday, or this Wednesday, there are Fed talks. So the Fed may change everything and say they're going to intervene. Who knows? So just bear in mind that Wednesday there are Fed talks, and this may have an effect on, well, it will have an effect on the market, and we're also inside earnings. I just cannot take any trades at the moment. Just my longer term trades are staying open, and I cannot recommend anything. I'm just sitting on my hands with plenty of cash waiting, and that is why I try my very, very hardest to warn you in advance so that you could close out some positions ready for this, because there will be many, many opportunities to come out of this once the market starts showing signs of life. Okay, not a very nice week, but it is what it is. Speak to you soon, guys. Hopefully I'll see something positive coming out in the next few weeks or maybe even months. Speak to you soon.